Pending sales are down. Inventory is up. Multiple offers are down. The real estate market is a changing. What does this mean for you as a buyer, as a seller, as a consumer? I'm going to get into it in this video. I'm going to give you my honest take. I'm going to give you what experts are saying. I'm going to give you what YouTube doomsdayers are saying. And then I'm going to give you my opinion, which is somewhere in between, right? About what you should expect in the 2022 housing market, what you can do if you're a buyer, what you should and shouldn't do to prepare yourself, all that and much more coming up. All right, Matt the Mortgage Guy, just some guy on YouTube, happened to be a licensed loan originator, NMLS number 1088993, giving you my advice, my take, because I talk to hundreds of consumers every single month. I talk to hundreds of real estate agents. I talk to hundreds of mortgage advisor, and I'll tell you what I'm hearing, seeing, feeling in the real estate market. Some of it's good, some of it's bad, some of it's in between, right? Just my honest feedback from somebody who's watching it on a daily basis, involved in conversations about the real estate market. And so without further ado, let me just tell you, things are changing. There is no hiding from the fact that with this interest rate increase, as much as they've gone up, as fast as they've gone up, buyer sentiment has changed. Affordability has changed. It's basically a whole new ball game in spring of 2022. And I really think that in May of 2022, we're finally starting to see the sticker shock. We're starting to see people, back out. Some just plain don't qualify. What is this going to do to demand? What is this going to do to, price appreciation in the future? These are all questions that you want to know as a potential home buyer, as somebody who's involved in real estate. Maybe you're a real estate investor. Maybe you just watch it and you're interested in it. Maybe you're an economist and you're just looking at a bunch of different sectors of the economy. But no doubt, this steep trajectory that we've seen over the last couple years, 15, 18, 20% price appreciation across all kinds of markets, this thing took a hard right. And whether we're going to take a hard right and go from 20% appreciation to 5, go from 20% appreciation to flat, or go from 20% appreciation to -10, whatever the case, the wind is moving in a different direction. We can feel it. Anybody who's paying attention, anybody who's talking to agents on a regular basis and talking to buyers on a regular basis know that things have changed, right? I'm having more and more conversations with market watchers, great guys like Ryan Lundquist, who's a real estate expert, local appraiser here in Sacramento, other great agents that I work with on a daily basis. You can see it. You can feel it, right? What we want to what we want to avoid, I think, as home buyers or professionals who are assisting home buyers in this market is the thought that we are just going to fall off of a cliff, right? And see a 40% decline in prices. And if you wait 6 months, the house that's listed for 500 is going to be listed for 300. That's just not going to happen, right? We've still got a lot of demand. If you look at the last 14 years of being underbuilt, that's not something that gets fixed overnight, right? This humongous supply versus demand imbalance, which caused us to fire up at a 20% home price appreciation year over year. As we quell demand, which was the Fed's initiative by raising interest rates, we're going to come to a more balanced supply versus demand, place where maybe we go flat, right? But I just think that when you look at on both the rent side and on the buy side, more people are looking for places to live today than there were 14 years ago because there's more people in the world, more household formations, right? And so if we built below like the long-term average by a long shot, I'll probably try to put this graph up on the screen because it might not translate if I just hold it up. But this is single family houses completed. That trend line across there is the average. The green is the last 14 years. I'll put this up on the screen, a more clear version of it. But we have a serious lack of housing supply. which is the main driver, simple supply versus demand. And we had to like quell demand, right? When you've got 2.5% 30-year fixed, everybody wants a house. Everybody wants multiple houses. I'm an investor. I've got lots of investor friends. The more debt you could rack up, sub 3%, when we're in a market that's got 8% inflation, like it's free money, right? It's like printing money, right? Now that we've got rates to a more normal level, right? And we've put a little bit of fire extinguisher on that demand side, we're going to see a more equal market. I know that the home price forecasts, like granted, forecasts aren't always correct, but if you look at CoreLogic, Fannie Mae, Freddie Mac, MBA, NAR, Ivy Zelman, across the board, you've got from 3% to 9.6 and a lot of numbers in between. Average of those is a 6.1% home price appreciation for all of 2022. That still means home price appreciation. That still means that if you don't buy today and you look to buy a house 6 months from now or a year from now, it's likely to be more expensive, right? I think that what some people are going to find, which I think is great for buyers, is that you might not get a house at a cheaper price next month, but you might get it with less competition, if that makes any sense. I know that we were in the midst of the frenzy buying. A lot of people's complaints as buyers were like, hey, listen, I don't mind the price. I don't mind $650. I just don't like the whole experience of listed at $579, offer $640, multiple counter offers, 12 offers on the table, all that stress that buyers faced when there was, you got to offer within 24 hours. You're up against multiples, put your highest and best, release all your contingencies, all of that stuff. As we start to shed that from the market, as we start to have demand come down, it becomes easier for buyers. What you don't want to confuse is easier doesn't mean 10% discount. I've got some buyers, bless you, if you know that I'm talking about you, that tell me, hey, this is listed for $675. Can I offer $590? No, no, not even close. The place will probably sell for $675, right? It won't sell for $715 like it might have if we were as hot as we were 6 months ago, but it certainly ain't selling for $590, right? And so you got to know what kind of market you're in, right? You got to be strategic. You got to be working with a great real estate agent. And so here's where I'll give a little advice. If you're a seller, you need to find an expert. You need to listen to the expert. The most important part is listen, right? Sellers want yesterday's prices, and yesterday's prices might not mean higher, but they might mean faster sold and above where you listed with multiple offers. Where if you priced it at $530, it would get a couple different offers between $540 and $560, and you'd sell for $560. Now you've got comps that say $560, and you can list at $560. Don't expect it to go $580 to $590. Expect that you might only get one or two offers, and it's going to sell for that $560 if it's priced correctly, right? An agent who knows the market well is going to know how to price it correctly, right? Don't be unrealistic as a seller. Just like I told my buyer not to be unrealistic, thinking you can offer $590 on something that's listed at $675. We're just not in that market. Cool survey done by my buddy Ryan Lundquist, SACappraisalblog.com. Did a survey of local agents. Sacramento and surroundings, a pretty hot market. How many offers are you seeing? 0 offers, 8% of respondents. 1 to 2 offers, 52% of respondents, the largest one by a long shot. 3 to 4 offers, 29% of respondents, and then 5+ offers, only 11%. So only 1 in 9 were getting 5+ offers. I would say that in Sacramento and surrounding, these agents might have seen 5+ offers on more than half of their listings only 3 months ago, 6 months ago. So things are definitely changing, right? One last thing I want to talk about too is that one thing to consider as a home buyer, rents are rising like they never have in the past. 0.9% vacancy rate means that rents are highly competitive, just like homes are to purchase. So I'm seeing the most insane rent prices I've ever seen. And as buyers decide in this market whether they want to buy or whether they want to wait, a couple things to consider. One, I don't think home prices are getting cheaper. They're probably flattening out. At the very best, you might see a 5 to 10% decline in home prices, but I wouldn't count on it. Rents for sure are increasing. And one of the benefits of home ownership is you lock in a 30-year fixed rate and you lock in a payment. If you lock in a payment at $3,200 per month as a buyer, even though you might be accustomed to paying $3,000 in rent, you have to think about what that 5, 6, 8, 10% year over year rent increase means to that rental over the next 5 years. Does that $3,000 rental become a $3,600 rental in 2027? If you sit on the sidelines, let yourself get priced out, and you reconsider 5 years from now, are you going to be paying $400 more than the payment you could have locked in 2022? Just some food for thought. Let me know if me and my team can help. We're more than happy to. Go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. More than happy to answer any of your questions. Go ahead, fire away your comments. Good, bad, ugly. I'm an idiot. I'm an expert. I'm somewhere in between. Whatever you think, I'd love to hear from you. I know that we've got two different camps, and somewhere in the middle lies the truth, right? We're going to crash and home prices are going to go down by 50%, or we're going to keep going to the moon. Those two different camps. I promise you, I'm not as bullish as the bulls that think the sun is always shining, and I'm not anywhere near the FUDsters, the fear, uncertainty, and doubt 60% decline in real estate. It's just not going to happen. So anyhow, love to hear your thoughts. Again, greatmortgagebroker.com. Fill out the form. Let us know how we can help. Talk to you soon. Bye-bye. I forgot to tell you, we gonna see.